Hello everyone, I'm Dr. Stock, and in this video we're going to take a look at the Nasdaq, specifically QQQ as it tracks the Nasdaq 100, and we're going to talk about the big tech stocks that are currently influencing it and seeing really how they're reacting. What can we expect from those? Also, two stocks that are really popping up today, and how exactly do we play those, if at all? Are they too hot to touch, or is there still some opportunity left? That's exactly what we're going to talk about in this video. And in line with opportunity, take advantage of the opportunity down in the description to get not only access to a wonderful trading app through Moomoo, but you can also up to 20 free stocks valued up to $2,000 a piece by using the link that's down in the description. You'll see me feature that app in this video, so make sure that you're on the lookout for that as well. All right, with that said, let's go over to the charts, and we're going to start off by looking at the Qs. So let me pop that up there, QQQ, and go. All right, and here it is, transition. Perfect. So looking at the Qs, and you can see, let's zoom out a little bit more so we can see the sort of path that we've taken. I thought we would struggle a little bit more in this area, and I would say that really big tech and the AI stocks just had a different idea in mind. As a matter of fact, if you watch Stocks with Josh Dahl, he talks about possibly AI canceling the recession. I don't know if we'll see that take place or not. However, it really did help us to power through, and then we are stepping up to possibly test these next peaks that we have over here. So this level right here is at about 360, 370. We'll see what happens. But look more recently at what we got. So we still have decent volumes, a little bit of selling today, but still holding steady right around that 350 mark in the Qs when we look at this. So let me put up Nvidia here. There we go. So with Nvidia, you can see from their earnings, I said I'm bullish on their earnings 5 to 7%, and then Nvidia was like, no, mic drop moment, and they went up well over 20%, and they've struggled a little bit since then, but my goodness, they were already a large company. Today, their market cap, I believed, just a little at the $1 trillion mark for market cap. When I reported on Nvidia back in January, it was like a $500 billion company. To nearly double in value since that time is absolutely incredible. So that's no small feat. Now check out this candle that we have here. After this huge run-up that we had almost to $420, Elon would be proud. It did sell off from there, and let's see that closing price. Closing price, as it's reported on Moomoo here, link down in the description for that, 401.11. So almost at that $400 mark. That could be a good psychological resist for us. It is possible that we also sell off as some of the value is no longer stored in big tech like it was going all the way back to October, or even when we look back to December. Now, with that said, I don't want to make it sound for a moment like I'm in any way overall bearish on things like Nvidia. Nvidia is my favorite play when it comes to the AI stocks. It's something that as AI has really taken off, and as Nvidia has come out and really marketed themselves. And in the last two earnings calls from Tesla, we even mentioned Elon comparing Dojo to H100 technology that Nvidia has. And Linus Tech Tips actually put out a video showcasing and actually talking through some of the specs. And I don't know if you like any of that sort of tech stuff, but if you do, it's definitely worth checking out. So Nvidia, incredible day. It is possible we see a little bit more of a sell-off coming from that now that that debt ceiling, which I think the market was already moving upward on the expectation that the debt ceiling crisis was not much of a crisis in the first place, just something needing to be dealt with. And now that that is sort of settled and there's pretty much an agreement to go forward with, needs to pass through Congress, is doing all right. So when we look at Apple actually, even though it's a green candle, so it had a higher close than its open, still pretty much the same, that we could see a little bit more price weakness coming from that. We'll look at Google. Google actually still button up against resistance. Let me see, where's that? Around the 126-ish mark, just above 126. And it can't seem to break that, although it is possible. It is still looking rather bullish. We'll see if Google can put out those numbers to propel a little bit higher, or it is possible that it fails to break resistance. And if the market does sell off a little bit, that it should go with it. Microsoft, wonderful run, taking a little bit of a breather right now, and it is possible. It's still in the overbought territory, but looking incredibly bullish. Look how long the RSI has stayed up above 50. As a matter of fact, it even has repeatedly come up over 70 to the overbought territory and just kept on running. So Microsoft looking pretty healthy in that. And let me see, where's my friend Amazon? I don't see it up there right now. We'll put up Amazon and we'll look at Facebook real quick. There we go. So looking at Amazon that we have here, having their golden cross moment, this is actually a fairly good looking chart so far. Amazon could possibly have that room to run higher, especially if online retail continues to stay strong. And we'll see if retail can hold out. Also, Amazon Web Services, we'll see what they can pump out in their own version of AI. So it's just going to be a slugfest right now between Google and Microsoft, Nvidia. Nvidia's not really slugging it out. Nvidia's more the supplier in this. Be like, hey guys, you do your thing. And, my technology is here should you need any help. And there's a lot of companies around the world that are looking for AI training hardware, and Nvidia is still top dog for that, and pumping out new technology all the time. So we'll see how that goes. All right, let's take a quick trip by Meta, and then we'll drop this down. There we go. So Meta, I would say, also looking a little bit soft, and it is possible you see a little bit of sell-off. If we don't see it soon, too much of one, I think that there's going to be a rotation to end Q2 into some other areas. So I'm looking to see where that is. Energy is actually pretty intriguing, although if we do hit recessionary times, energy could continue to struggle, although we have really seen this rotation through the different sectors recently. And every time that we see consumer staples drop to the bottom, for example, it's not too long before we see some strength come back to it. We see it in real estate too. Energy has been no exception. So energy is one of those places that kind of intrigues me right now. And it's something that I'm looking into. We'll see how that goes. Now, one of the show stealers today, SoFi, as part of the debt ceiling deal, 60 days after the passing of the debt ceiling deal is when student loan moratorium ends. And so that was very good for SoFi. Take a look at that chart that we look at when we look at this daily chart. So there's the 200-day. I'll zoom in a little bit more so you can see that. So right where this blue dotted line is going across your screen, that bottom of the wick, that is where that low price was, touched the 200 and then shot back up. As a matter of fact, it looks like it opened right at about 580, came all the way down to about 560, and then closed at $6.03, closing over $6. Wonderful for SoFi. As a matter of fact, it is possible that we continue to see some strength coming out of SoFi. And this is kind of a double bottom that they have going on here. And you can see that they didn't quite make it back down to where they did at the lowest that it ever was. And we can zoom out even more so you can see that. And so finding that area of support being a good area of support, and it is critical that we end up making it past this resistance, and it's going to take some momentum to do that, and it'd be good if the markets were there to help it out. Now, softness in the markets, I don't think that we come crashing down. I do think that it is possible that we rest a little bit before the next leg up, and so we'll have to see if that happens, especially if there's any profit taking. So SoFi, I think there's a little bit of room for this to go up yet. It is possible that we start to see that 650 where we have the top of these big red candles that are here and sort of about the bottom. So 640 to 650, possibly where we see SoFi. That's significant movement percentage-wise for SoFi. So even though it's only a few cents, those big percents, those are the things that make the difference. And speaking of big percents, I think it's time that we look at the show stealer today, in my opinion, and that is C3AI. So C3AI, there we go. Closing the day, 33.42% up from its previous close and on significant volume. Now, this sort of volume spike that we have here, I think that there were some people that were short C3AI, and a lot of those shorts ended up having to get closed out, being is that when they closed, they were at pretty much a resistance level already, being up above $33 a share. And this is a case where there's a high anticipation for excellent earnings coming out for C3AI. However, last I looked, I think they had like $66 million in revenue. And right now, as of this price, I think that they're about a $5 billion market cap. Let me pop this out from the side. Yeah, 4.93 billion market cap right now on 66 million in revenue. And that's looking backward, not looking forward. They are a software side of AI, and that is a place that could be overtaken with not as much effort as Nvidia, for example, which has a significant moat around it because, well, people have to be able to develop hardware to overtake Nvidia in the first place, whereas developing software is a much easier thing to do, even with all the AI training models that are out there. So I'm not saying that I don't like this company. I do like this company. I just think that they're a smaller company than what this price is reflecting right now. And I think that we'd have to look significantly forward, and they would have to make it up and around significant competition as well in order to really make this value worthwhile. So it is possible that tomorrow we get a little bit more of a push up. This went up 33% on the day. that Nvidia did start off strong, and this was up around 20-25%, and then Nvidia started to sell off a little bit, and this went up even more anyway. And I think that this is going to be a sell the news for their earnings, which come out in the after hours tomorrow. So be looking for that. So today is the 30th, so tomorrow's the 31st, last day of May. In the after hours, you get the C3 AI earnings, and they'll probably be pretty good. However, if we see even more of a push up in tomorrow's market, that to me confirms even more that it's going to be a sell the news time, and it's possible that we come right back down to these mid to low 30s levels that we start to sell off, unless earnings are just that incredible that they have not only just smashed expectations, but also that they have wonderful guidance coming out. And especially if they put out news that they are developing some sort of moat that's going to keep other competition at bay. And that is the thing that I worry about from an investment, not necessarily a trading standpoint, but competition would be something that would keep me from being a long-term investor, but I will absolutely trade this. I do have a small put option out. I didn't put out a lot though, because the implied volatility is absolutely high, which I did mention opportunity. And one of those opportunities I think that you really have here, especially if you're somebody who holds on to a lot of shares of C3 AI, I think that there's opportunity, and do what you want. None of this is financial advice, but selling calls while the option premiums are high could be very, very favorable for you, especially if you plan on holding on to those shares. So if you did something that was, for right now, we'll just go off the price that we see as of today's close, assuming that tomorrow is anywhere near it. So let's say that tomorrow we still think that 45 is going to be a price that's out of reach. If you set your strike price just above that, especially in a short time frame, you can really capitalize on that premium. And if should the stock fall through the floor, then you can either buy that back, or you could just let it expire worthless, since you set a strike up above where you believe that stock price will be. So I think that that would be one of the incredible things. Of course, that requires that you have 100 share lots in order to do that. So a way that if you did sell those calls without that, that would be called selling naked shares. And that's very, very risky, because that has an undefined risk. You have to pay the market per 100 shares, whatever that market price is, if the option gets exercised by the buyer of that contract. And that's an undefined risk, and that's not a way that I trade. It's not something that I would do on this. But if you are a shareholder that has hundreds or even thousands of shares of C3 AI while the premiums are high, you don't have to part ways with any of them. Of course, you risk parting ways with them should you sell those calls, but you don't have to, and plus you capitalize on the premium. So you could still have that. The stock could fall back down. You could have made some money while it was up high anyway. Just something to consider when the stock has, or I should say the options for the stock have the high implied volatility that they do. I think some of this was up over 200% for implied volatility, and that makes it incredibly expensive to be a buyer of those options. And that's why I only took a small play, and I also did it fairly out of the money. And, I know when I stand to lose on that one. I don't think that I will, but we'll see. And especially if tomorrow pushes up even further, that could inform my future direction from there. So we're gonna have to wait and see how that goes. So let me wrap this thing up. Moo, absolutely take your opportunity with that link down in the description. Click sign up, deposit your cash. $100 or more gets you 10 free stocks. $1,000 or more gets you up to 20 free stocks. Like I said, each one of those valued up to $2,000 a piece. This market could possibly show us a little bit of weakness in the coming days, could sell off a little bit on us. However, I think it isn't done running yet. We'll see how the end of June goes, where those rotations happen, and I'll keep on watching the markets and keep on reporting it back out to you guys. Thank you very much for watching. I hope that you clicked the like button. If you didn't and you did like this video, please do so. Remember to subscribe and hit that notification bell to see anytime my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.